Hello traders, today is the 31st of January 2013, and the time in London is 20:06 p.m. In New York it's 15:06 p.m. Happy trading to you all. This video is about Fibonacci, and the title of this video is Double Edge Fibonacci trading. Okay, in this video we will talk about how we can use the Fibonacci retracement and the Fibonacci extension like professional traders, and how we can avoid making mistakes when we are using the Fibonacci retracement or extensions. I have here the USD card. We are on a 5-minute chart. We can see that the price went down from here. What I'm going to do, from here to this level here, and then it retraces. So we have a kind of a rally in a downtrend. So the price went down, but people took profit up to this level. This is what we call retracement. So price was going down and then rally a big up, but couldn't come back to the starting point. Is what we call a rally in a downtrend. Then the price again, pay attention, you can do this on any chart, and then went down again from here to this level. It's there, we can't deny it, and then went up from here to this level. Pay attention carefully, and then went down from here to this level. All right, so what's happening? So these levels, that's what we call hotspot trading zone, but we are only on the 5-minute chart. The best thing is to combine the hotspot trading zone on a higher time frame and then switch to the lower time frame. This is more solid. So this is what the price has done. All right, so how do we use Fibonacci? So for instance, if you were here, the price went down and we see it going up, because if you want to sell, you want the price to go up first. You see now? Do not sell when it's going like this. You want it to give you a bit of pull, rally in a downtrend, and then you sell it down. Very often, professional traders use Fibonacci tools, and they would draw their line ready to see how much rally we're going to have in a downtrend. You see this level here is 38.2. This one here is 50%, and this one here is 61.8, and another one here is 78%. Do not be scared about these numbers. These are what we call a measurement tool, the Fibonacci tool, a measurement tool to know how much profit people have taken. All right. So if they made, if the price went down, 100 pips, and people took, 50 pip profit, that's 50% retracement. If the price went down 100 pips and people took 25 pips, profit, that's 25% retracement. If price went down from here to here is 100 pips, and people took, for instance, 61.8 percent, 61.8 pips out of the 100, that's 61.8% retracement. Nothing magic, nothing complicated about it, especially if you are a new trader. If you're an experienced trader, stay with us as I'm going to show you how traders are making mistakes using wrongly the Fibonacci tool. So we see that the price was start going up here. What do? You will see very often, trader will come and sell. Some trader will come and sell at 38.2. Because stochastic is overbought at 38.2, trader will sell, expecting the price to roll it down to 161% Fibonacci extension level. And sometimes it doesn't work. You see here, some people sold it here, it went down a bit, and then went back to the 50%. You can see some trader tried to sell a bit here. Can you see it? Waiting for my computer to respond. Too many things running here. You can believe me for that. Too many things running on this computer right now. So my apology for this. So some traders sold it again at 50%. Price went down, a bit. Price went up to the 61.8. Some trader will try to sell them. Didn't work. Now the price went to 78% level before the price went down. So how do you know where the price is about to change direction? And how do you handle that? So this is just something, is in fact a kind of gambling traders are doing, hoping that the price will respect or obey them, but sometimes it does not. So traders think that all Fibonacci tool doesn't work. It's not that. is how you understand the tool and how you are using it. Okay, so price went to 78%. Okay, I don't use 78.6. I just put here 78% instead of 78.6. So if you learn Fibonacci, okay, like Lavoisier, you want me to use the correct ratio, I use common sense. 78%. I'm talking about zone. Okay. All right. So forgive me for that. Okay. So went to call it 78.6. Okay. Level. Traders are watching. Some traders will sell always here or buy in this zone. But how do you do it? Okay. You use channels. So price. What will the price do? What the price doing all the time? The price is always in a channel. So let me color this one in also red. So we're just going to go step by step how we can avoid mistake when we are using the Fibonacci tool. Okay, it's about double edge. Hope you like that title. Okay, double edge Fibonacci trading. So you want to use Fibonacci tool to make money, but if you are you can also lose. That's the double edge of it. Okay. So how do we avoid, okay, to go on the wrong side of Fibonacci double edge trading, okay? So, and then we have a new channel here, you see? If you use the channel, you can make a better decision. Okay, now I'll use red again so we can harmonize the color, so to speak. Red again. So price went down and then was in this channel. So if you want to sell, because you see it come to 23.6, and then it went to 38.2, blah, 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 and then went to, where are we? It went to 50%, but the channel is here. So if we want to sell, we will prefer to break below this rising channel and to retest it here. This is not a bad place. So it didn't go down so much, but it's not a bad decision if you sell here. It's not a bad decision. But if you are selling here, you know there's a support here. The support here, so you know that as soon as it come near, it takes profit. See, as it went up, display double bottom and start running up. Okay, or if you want to remain in it, so move your stop loss to break even if it come to this level, so you can control the risk. Okay, that's why we say to trader, you are the most important trading tool. You are watching it, you understand it, and you are managing it. So you see here, so you won't bother to sell at 38.2 here because the price is still in this channel. Okay, conservative trading using channel. But the price break above the channel, what do? We will project the channel. Remember that. Okay, sometimes traders tend to forget, but try to get into the habit of just doing it. As soon as you come out of it, just take your tool, draw another channel straight away on top. Okay. So that's so we will be watching it here. Nothing has happened. You can see the candles. Can you see on your chart? Okay, this is about the double edge Fibonacci trading. Now you come out of the second channel. Okay, we just say game on. All right, make it parallel, equal size. We are talking about equal size channels. We are just projecting them, and we come to the third one here. Price pierce the top, only to close within it. So very often, if the price, when we have one projection and the second projection very often we highlight, okay, resistance level. Look on your left hand side. Okay, look on your left hand side. You see this level here. Okay, price hospital zone here, and this point also you see, and it's also the 78%. Or 78.6% to be exact. Okay, I prefer to say 78, but I will say, okay, 78.6% Fibonacci retracement level. Now we are here, third projection. We are watching it. Okay, you see. So it pierced it like this. All right. Let's zoom into that candle a bit. We are on a family chart. My chart is not responding now because I had too many things running. I'm scrolling, doing all sorts of things here, but it's not allowing me to do it. So my apologies to traders. So here we see it. It starts coming down like this. Okay, but if it's coming down like this, it's not very interesting. You see, I may decide. You see, rolling it down, or if you want to take it, you want to control it carefully. So tiny risk. So you may take it 10 pips stop loss, put it somewhere here. If it works, good. If it doesn't, okay, no problems. Okay, that's not too bad. Okay, calculated risk. Okay, you can do that. But you don't want to gamble it just selling it because it reached a level. These are just measurement levels, but you want to watch it. Another thing that you can do, you see here, the trend line will save you all sorts of hassle. Let's draw a common sense trend line along this line, which I will color again into red. So somebody else who saw this common sense trend line broken and sold it, it's not a bad decision. So you want to sell at 78.6%. Now the trend line here is broken. Good. You may decide to sell if you are aggressive trader and place your stop loss on top here. That's not gambling. Okay, you see now, that's not gambling because the trend line is kaput. Okay, but you know, it may work, it may not work because you have other levels here. All right, so you can use these steps, okay, to avoid making wrong decision. But now we know that the 78% has hold. The price, you sold it here. As you sold it here, because this trend line was broken, here also. Let's draw another one here, another common sense trend line for the first people who sold it at 38.2. Was not a bad decision, but it was near a support level. Here, you see. But you see, it came just coming down, but there are support here. These are scalpless. So if you want to take 1 pip, 3 pips, okay, it's up to you. All right, but you see. So when the price goes to 78%, 78.6%, and we find a resistance, traders will use a Fibonacci extension tool. Okay, I'm going to draw my Fibonacci extensions. If you want to know more about Fibonacci extensions, you need to go to www.dayprotraders.com. Okay, all right, that's our channel also. So instead of drawing the Fibonacci retracement from here to here, from here to here, if you want to have the extension with this TC2000 trading tool, trading software, we will start from here to this level, from here to the opposite direction of the price. So because the price went down this way, we want to use the extension. We will start drawing from here and bring it to the other point. But if you want to draw the retracement with this TC2000, we'll start from the direction of the price. Price starts here and ended here. That's how we draw this retracement. All right. Okay. So because the price went to the 70, okay, we know that. So now this is a different thing on the chart. Don't pay attention to what is here now. Yeah? What I've drawn before. The price went to the 78.6% level. We'll expect it to go down to, okay, the first thing that comes into my mind, come down to the 100% level, which is here. This is the 100% level. Price move from here down to this level here. That's the 100% level. So it retraced to 78.6%. Trader will be watching the 100% level. You see, that's why when you start rolling it down, some traders took profit here. He tried to come down again. Traders were buying because they know that 78.6 retracement to the 100% very often. Sometimes it may not. You see, because it's the price. A human being, we are not trying, okay, to assume anything. Price can do what the price can do, okay? So that's why traders will take profit here. All right? Okay? So this is the 78.6% Fibonacci retracement of this level. So we will be saying, all right, price going up. The next thing, ladies and gentlemen, those who are using Fibonacci patterns, talking about butterfly pattern, because the butterfly pattern, price went down, price went up to the 78.6% zone. We're expecting what we call the BC to be between 38.2% up to 88.6% retracement of the A. B. This is from here to here. That's the BC. I don't want to go into butterfly pattern. You can go to YouTube. Plenty of video about the butterfly pattern. Plenty of video on Google about the butterfly pattern. Watch them. The patterns. Okay. So traders, as the prior, you see, retracement to 78.6. They will be thinking of butterfly pattern in this case. And as the price start going up here, they will be saying that it's going to, well, okay, in a zone of 161% Fibonacci, okay, extension level. So a lot of traders that were buying here, they were expecting this currency pair to continue the movement to the upside. In fact, this was a bullish setup, okay? If I show you on the how the market is changing very fast due to economy news, okay? You see, this is on the hourly chart, you see. It move up, pull back, move up, you see. Traders were expecting, okay, a bullish price, you see. Yesterday night started going up, but it fell here, you see. This trend line, the black trend line was violated, okay? See? We went below it, so kaput. It's not holding it anymore, okay? All right, so going back again to my 5-minute chart, but by the way, why the music has changed for this currency pair suddenly and the things went kaput here? Normally, you should hold it here. I will show you. The trading triangle, the market first, the sector, and the individual financial, the market first, the sector, and the economy news, the leaders. This is about economy news. On Wednesday, there was some data regarding the United States. Here, this one, the red envelope here. Can you see in your chart? You see, Wednesday, the 30th of January, at 8:30 a.m. Eastern Time, which is 1:30 p.m. London time, advanced GDP, okay? US, this is United States, projection 1.1%, actual figure minus 0.1. It's bearish for the dollar. So that was Wednesday. Okay, today, Thursday, there was another data. This time, it's Canada, okay? Canada. This time, where are we? The Canadian GDP. Sorry, my concentration is going down. This one here, the red envelope again, 8:30. So yesterday, so today is Thursday, the 31st of January. So on Wednesday, we saw the GDP for United States. On Thursday, which is the next day, GDP, okay, Canada. Look, projection 0.2, actual 0.3, 0.3, bullish for the Canadian dollar. So you can understand fundamental traders saying that, all right, so you should be selling the dollar against the Canadian dollar. Music has changed here, okay? Boom, 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 down. All right, so from this point, price reaches to 100%. Going up, we will be thinking of a butterfly pattern, thinking of 161%, salivating that the price will go up all the way up here. But the music has changed, talking about economy news, as I show you today. So I'll show you, in fact, the time. If you look on the top left-hand corner, you see 8:30, okay? It's coming there. Can you see? Top left-hand corner. You see Thursday, 1st of January 31st, 2013, 8:35. That's Eastern time there. That's the time the news was released. Well, this is where I put in a vertical line now. Okay, and from that point, people start selling like a mad traders. No one is like mad though. You see? So what happened? We were near, in fact, we were near, okay, the media line of last week, which is the pink line here. But look, it just breaks through it. Didn't hold it. Economy news, sentiments has changed. The sentiment, if the sentiment is changing, watch it, okay? The sentiment has changed because of the data, okay? Let's go back again to double edge Fibonacci trading. So here, trader will be thinking of butterfly pattern, price start going up. Okay, let me remove my first Fibonacci drawing tool. In fact, I will remove also this one. Bear with me as I'm doing this step by step. By the way, today is the 31st of January, so we want to pay attention to the monthly candle tomorrow. Very, very important. And to adopt the trading idea, part 2. All right. Now, so now we see, so price came here, start going up. We are here now, so we will start using again our Fibonacci drawing tool. Price went down from here to here. start going up, we want to know how much profit traders are taking. Okay. So prime came to the 50%, so they took in fact 50% profit. We know that the 50% Fibonacci retracement level is what? A psychological price level. If the price fell to go above it, it's bearish, big time. We want to watch it. Not that we are just selling, but we're taking a value signal, price giving us, okay, a bearish channel, price displaying lower lows, lower high. That's how we do it. So this is price, so went down from here to here. We draw again our Fibonacci retracement tool. Here it start going up. You see, traders start selling. You see, this is our gamblers. You see, people were selling at 50% here, at 38.2. It went down a bit. 50%. Some aggressive traders, they challenge, they sell it first. It went up, they sell it. It went down a bit. The price returned back above the starting point. They sold it again. So it's a bit of pressure here. But I want to know straightforward. How do we avoid the mistakes? Instead of selling anyhow, draw the channel. Just draw a channel. Just draw a channel. Look at this beautiful one. Look at that. Look at that. The channel will help you make excellent decisions if you are Fibonacci trader. Just draw the channel like a little child, okay, learning to draw lines. Okay, draw the channels. Even if you want to make your decision on a single time frame, which is completely wrong, just use channels, okay? Break a ball, retest it around. You see, so you will be very patient. You just know where are the level, you know, 50% here. Say, okay, it's in a rising channel. What George has said, we don't want to sell it like this, okay? But you see, we want it to come out of the channel and to retest it, and to give us a sell signal on the edge here. That's it. This is what has happened. So you may, in fact, even if you like, so price went all the way there, and then the trailer along that section also was kaput. Okay? Yeah? Okay, it's kaput. So, you see, small channel. My software is not responding now. Okay, my apologies to traders. If you can't see anything, forgive me for that. Okay, I promise that I will rectify that. So, you see, so we will wait for the price to come out of this channel instead of forcing it selling. Sell 38.2, 50% sell. You just wait. Sometimes the price will just roll it down completely. So in that case, if you want to follow them, control your risk so they don't get you into trouble. Because sometimes a group of traders can lead other traders into trouble. All right? And that's not very nice thing, okay? So this is about, okay, double-edged Fibonacci trading. There is one article that I've written myself. This is about Fibonacci trading and Fibonacci gambling. If you want to know more about what I'm doing here, you need to go to hub pages here. You can even follow me. That's me here. You can follow me here. I don't have too many people following me right now, okay? So, but don't worry. You can follow me here. So if I post any article anytime, you can come and read it. You will be notified by your hub pages, and you will also other traders that are writing articles, you will be notified, and you can read the excellent article. So this is about Fibonacci trading and Fibonacci gambling, which I explain to traders here. Okay, so this is it. Going back again to our drawing board, so to speak. So price came to the 50% and then final resistance. Okay, I'm going to remove my Fibonacci tool. We know how far it went. Now we want to use what? Fibonacci extension, because the price went down from here to here. To draw the extension with this TC2000, we'll start from where the price has ended. From here to here. And trader will say, because 50%, myself, 50%, trader will say to you, 127% extension zone, maximum 138%. That's the theory. As you can see, look, the 138% extension is this one here. Some traders took profit here. These are conservative traders. You see, they took some profit. Price, you see, some trader also, if you are gambling again, some trader will just place a trade here to buy. Is the price out of the channel? It's not. You see, it's just pure gambling. The channels will allow you to make excellent decisions. So if you are just buying here because you say target 138%, buy. It will definitely work. It worked last Friday. It will work again today. But today is not Friday. Today is Thursday. I'm speaking at least to get your attention. All right. Because I've done this sort of mistake myself, I understand it perfectly, and because you want to trade, sometimes you want to be in the action, you think you're going to miss opportunity, and your heart is saying to you, it's still in the channel, but your head is saying to you, think of all the profit you can make now, all right? So you want to align your head with your heart, okay? So right here, so some traders took profit, it's not bad. Some traders also were trying to buy here. When it comes, the next target after the 138% is 161.8%, okay? Some trader will take profit again here, and some will come trying to buy here. You see now? So they try to buy here, okay? But the price not out of the channel, you see? Finally, the price went down. I mean, you see? So you can just draw your channel and wait, or start whistling and know that soon they will be out of the channel, and you can take advantage of it nicely. Like here, you can just watch it and draw your channel ready and just wait. Sometimes the price will be very nice as it did here. Sometimes it may not, which means just come out and you miss it. You say, oh, what? I miss it, which means they have been very selfish and they just push it down without retesting. Okay? All right? It makes sense? Okay, moment please, just to do something here for myself, because I'm trading at the same time I'm okay, moment please. Okay, I'll get it soon, just to breathe in and breathe out. Okay, moment please. One second, please. I'm still here. I'm not going anywhere. All right. So, as I explained to you, this is about gambling. You don't want to just chase it at the key levels like this. So, price went to the 50%. You see, from here to here was 50%. And then the next thing I want to show traders, because you see from here to here, the price retraced 50%. So we'll be using a Fibonacci extension tool to measure this 138.2% extension zone, 161.8% extension zone. But we do not want to, we can take profit at these levels, okay? But what we can do is to just draw channels, or we can take profit. That's perfectly okay to take profit, but we don't want to just force, okay, the price, okay, by trying to buy at this level, thinking that the price will definitely stop at 161.8 or whatever, okay? Just acknowledge the levels, nothing magic about it, but wait for the, okay, the price to come out of the channel before, okay, you make a decision, okay? Use the channel. The next thing I want to say to you, you see the price went down and then went to 50%. There's something very interesting happening here, which I'm going to show you now. I will remove my Fibonacci drawing on this one. Because traders are watching, there are different traders, they use the Fibonacci in many ways. Some traders will still have their previous drawing on this session. So from price went down to this level, it's still in this session. Look, the price went up from here to here. Where is the 50%? Let me put a line there for you. Okay, which I'm going to call out. The 50% for that movement is here. I will call it in blue. Look what's happening. The 50% on the move from here to this level is exactly the same level. It's the same 50%. You see, it's just here. correct level, just above, you see, the 50% of this one. From here, the movement from here to this level, the 50% was almost the same level. They are near each other, somewhere here. So we have two 50% levels, one for the movement from here to here, and another one for the movement from here down to this level, which make this level a very important level that we need to watch. So traders that are just watching their Fibonacci tool, drawing it with on this side, we'll be calling this zone as 50% zone. On the other hand, traders that are also drawing their Fibonacci tool from here to here will be calling this level also 50% zone. So we have the two 50% retracement converging to the same zone, but we usually trader will talk about convergence or confluence of two key levels, but it make it very interesting, it make it useful, but we want to still draw the channel. It's not because we have two confluent levels, two important levels in the same zone, that we should just sell saying that it will definitely come down. Clustered Fibonacci level, that's not, we don't just make a decision because we have two important levels in the same zone. We will still draw our channels and just follow the price as we are doing now. You see now. So those who use this session for their drawing, let's see their extensions. So they will. This is about going to the mind of other traders. So you're not alone in the market. And traders are doing different in the market. And myself, if I can know what these people are doing, I want to know. So I will draw my Fibonacci extension tool also in this session to go into the mind of traders that are using this portion instead of this portion for their extension. By using this session for my extension, I have my 161.8 in this level, which is this level here. You see, this 161.8 is different from the first one that I was talking to you about concerning this portion. The 161.8% projection of this session is different from the 161% projection of this session. So that's the new 161% is here. The previous one was somewhere here. You remember? The previous 161% for the movement from here down to this level was here. But you see, the projection, the 161% projection in this session is now here. So traders that are using their Fibonacci extension like this will be watching this level for 161%. Traders that are using Fibonacci extension for this portion will be watching their 161% here. But at the end of the day, you can use this level to take profit or to exit a trade, or to manage risk, But it doesn't guarantee that you can just buy here saying that the price will turn around at 161%. So you see now the difference. Traders that are here will call this level 161%. Because this is the 161% projection of the movement from here to this level, it was here. But the projection for the projection 161% projection for the movement from here to here is not this level, but the blue one here. So you see, so you don't want to gamble it, as I put it here for you, Fibonacci trading, Fibonacci gambling. You don't want to gamble it. You want to trade like professional traders, making excellent decision. At key levels. So right here you will draw again your channel again. Color it again into red. You see, now you like, I think the purpose of drawing too many lines is to show traders that they can do it. So you can do it. Draw your channel. So it's quite steep, this channel. So you watch it. It's out of the channel. You can project the channel here if you want to, and project it. Don't forget the projection. And you know the 161 is somewhere here. So now it's above it nicely. If we start seeing a higher lows here, we will take part into it. You see. So you see, yesterday I put some information for TST traders. Was bullish here, price started going up first, and come down, and then went up a bit. And now you see the music has changed because of the economy news, which can change the dynamics of the market at any point. This is about double edge Fibonacci trading, and I hope you have enjoyed this video. You have learned something from it, and then you will put into use, okay, to make better trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW, okay, traders. Speak to you soon.